You know, I sat here and thought for a long time about what the best way to sort of sum up the day was. And we're going to talk about it in great detail, but why not start off right by having a meme? Here's Will Smith slapping Chris Rock. And this is a pretty good representation of of what I think you saw happen today. Will Smith has added options chains, and the price over here is Chris Rock. As we kind of got rocked down pretty damn heavy here today. Guys, what's up? It's your boy Trey from Trey's Trades coming back again for another freaking video. Like to remember by saying that I'm a financial advisor and our experts. So take what I say with a grain of salt. Let's get into the video. So today we've got a lot to talk about. Obviously, Amy had a shit day. I mean, there's just no beating around the bush here. I think a lot of people were caught off guard by sort of the way that the price has been moving around today. This is, I gotta say myself, I'm caught off guard, and it hit me at about midday. You know, midday. We look at the chart here real quick. 5 minutes or so. I expected a rally at about midday. You could actually. I was talking with a couple of my buddies about what I thought was going to happen, and I thought you'd see it, you know, sort of get a push into the open, followed by a flush that would recover by midday. Well, I expected this to be the recover, and it continued to move down. And I think to myself a lot. I've thought about, you know, sort of what has moved this down. I kind of contributed to things which we're going to talk about. But I'd look at the options chain. I think this has a lot to do with the way that the stock has moved around today. So we're going to dig into that. Guys, we're going to look at the options chain. I do want to discuss this. I want to talk about supply and demand because I do think that played a pretty decent role in the way that this moved around today. And in my opinion, this is about as clear cut as it gets, a way that that market makers are sort of able to shift things as they want and as they see fit. And then we're getting into the charting. I want to look into tomorrow because I'm just going to be frank with you guys. You know, we're kind of in an interesting spot where the chart is going to have to match up a pretty decent sized move, and I'm going to talk to you about what I think that looks like here in just a little bit. Hold on one sec. I got to redo my pen here. My pen's not working. There we go. And then after we look at the charting, I want to talk about the halt because there was actually a pretty interesting little piece that was put together by Dave Lauer that I find to be interesting about, you know, GameStop specifically. So this has nothing to do with AMC. This is about specifically GME. I only bring it up because obviously both the stocks halted within 60 seconds of each other. And that ultimately had something to do with the way the momentum is playing out. I think we can all look at the chart and say, yep, this is looking like it was going to do something pretty nasty. You see this halt up, halt down. And then from there, you know, we can see where the price is at today. It's hard not to think to yourself, what would have happened if that halt had not happened? So I do want to discuss that. Then I'm going to go into BBIG. I did discuss this yesterday, just a couple possibilities that I found to be possible. And it looks like the one in which it retests that supply zone now acting as demand is in fact the one that it is going to be taking. You're going to look for this follow through, but the possibility is there. So I'm going to discuss that, BBIG specifically. Then I want to dive into the SPY. Obviously the SPY into close today. Man, it was just it was a slapdown day outside of a couple specific stocks, and the SPY was no exception to that. Obviously, IWM actually took a bigger hit, which is the Russell 2000. It's a small mid-cap ETF. SPY was down 0.62%. IWM was down 2%. So growth stocks took a really big hit today, and that certainly obviously did not help AMC's case as IWM did get the move down that it did, which I'm going to discuss. AMD. I'd like to go over this. This was yesterday's play of the day. We had an if this, then that sort of scenario in which I said if these conditions are met, this is the way that I would play it. I want to go over how that actually went down, the mistakes, the good things, whatever, so you can walk into tomorrow having learned a little bit of something. I'm going to go over the Discord play of the day, which was Saucy. I'm actually buddies with Saucy. It's good to see him doing his thing here. And then tomorrow's play of the day, we're going to go over here as well. So let's just start off here with AMC. What do I think happened today, right? Now I can sit here and scream all day long. I can bang my head against the wall and I can say this is fucking stupid, right? But I like to dig a little bit deeper and think to myself what really is going down here. And the thing that genuinely makes the most sense to me, and where these guys are really fucking sneaky. This is actually some super sneaky stuff. is the added options chains that have gotten influxed into the weekly expiration for AMC. You can see here, before I talked about how the 41s through 44s were added, the 44s already have 14,750 open interest, right? Now, inherently in and of themselves, options don't move price. It does not create buying pressure until the risk of hedging takes place. Once those out the money calls, which are what the 44s are, then run in the money. Well, what happens now is we've moved all the way up to the 51 strike. You look at this 51 strike, the 45 all the way through the 51. And there's open interest here that previously would not have existed. So what you just got to witness is, once again, an increase in supply. I mean, this is honestly, honest to God, like a short-term dilution. The market makers adding options chains like this every day, even if, in my opinion, this was unwarranted. I don't feel like they should have added the options chains for calls that they did, because the supply and demand was not warranting that, right? I mean, you didn't really set, if you want to consider, I guess, a 0.5% green day yesterday warranting the demand, maybe, but that without a shadow of a doubt has influenced the way that this is going to be having moved today. You know, you can just see it. You can see, hey, look, we added a whole bunch of different options to the chain. We got more calls, 45 through 51, just ping pong in a falling wedge back and forth. It's just clear as day. I mean, I really do think that played a pretty big role in it. And the way that this moved, this is the most unnatural that I've seen AMC move in a while. And let's just be honest here, right? I've seen it green in the same way. This is a very unnatural move as well. This huge push up, a lot of this was likely algorithms, either hedging stock or just buying in because, hey, this crossed that and this says this and this says that and this is a great time to buy. Well, what you just witnessed today was basically the inverse of that. You know, the inverse of that at a slower, it's decelerated, you could say, a slower pace, just ping pong its way back and forth in a falling wedge into the close. And that's left us in an interesting situation. I want to show you guys the 1 hour chart and where we're sort of sitting right now. This momentum level, it just barely hung on to into the close. Got a small little bounce off this momentum level, which was a high from 2 days prior, right? I'm going to show you this really quick. I had leveled this off today because it was the previous, it was sort of like that low momentum spot where if you crack over that, you can tell that there's going to be a pretty decent little push outside of just that previous intraday high. And it held on to that pretty decently. I mean, into the close, it did for sure. And now into the close, looking at low volume as well, it's down about 2.5% or so. This is frustrating, I'm not going to lie, because everything is screaming. Looking at this daily chart, you know, there was a couple different scenarios here. I don't think this necessarily means that you're not going to see a move. I'm going to talk about what I think are the two possibilities, and both are going to have big moves nonetheless. But I think the options chain is 1,000,000% what is to blame for the price action today. I mean, you increase supply, just inherently that decreases demand. You know, that's economics 101, and you got to witness that today. You know, this is market makers doing. To me, it's not the market is manipulated, whatever, because it's legal, you can do it. But to me, was the demand warranted? You know, was the supply warranted? Was there enough demand to validate the fact that they added 6 different strikes to the call options chain? I don't really feel like that was the case. But nonetheless, let's go over the charting, because as I mentioned before, I think we're at an interesting spot where you've got one of two things that are possible, and I think both are big moves regardless. So let me show you this. I'm going to give you the worst case scenario first. And obviously where we've closed, I've said this before, actually, this works for both the upside and the downside. When you have a huge move up like this with no retracement and all it's doing is just Hulk dicking into the clouds, typically the next day you expect some sort of pullback, some retracement, right? In the same way that you'd expect a relief bounce. Today was literally just this. So I'd expect some form of a relief bounce. But what I am expecting, you know, as a worst case scenario, I'm going to paint this out for you really quick. I think the worst case scenario coming into tomorrow, and if you've got calls, if you've got this, if you've got that, if you've got a short time frame, whatever, you make your own decision. I'm not here to tell you to buy. I'm not here to tell you to sell. At the end of the day, it's up to you. But the worst case scenario is it doesn't hold this momentum level, and it's got to test 2 different spots. Bottom of this supply zone, 2260. And if it doesn't hold that, you're genuinely looking at re-entering the 21s. Now, is that the end of the world? Let me zoom out for you here a little bit, right? Let's just take a real peek at where we're sitting right now so you can understand sort of the full gravity of how far we've broken out of this wedge. If we were to come back down and retest this wedge, we would be at 1660. Don't get this fucking twisted. This is still a clean breakout where I personally just believe that momentum in the worst case scenario may have got halted, right? Does that mean that you're not going to see a big move up? No, not at all. I think that the second option here is obviously going to add some time because there's a lot of options. There's a lot of options this week. This has been a heavily traded week. I mean, the 40s have 58,000 total open interest. I mean, that's a lot. And if those expire, I think you might see it's going to take a little bit of time to rebuild that momentum. And you know, we've talked about this before. You look like a genius. You look like a genius if weekly expirations end up coming to fruition. And I'm not here to ding on anybody. At the end of the day, I'm not in charge of anybody's money. They're in charge of their own money. They got to do what they got to do for themselves. Whatever. It creates insane momentum to the upside if it works, right? But if it doesn't, it's just going to slow things down. You're going to see a slowed down trend. You're probably going to see volume de-escalate if we don't get the second scenario here. And I think that worst case scenario is that 21-ish range, 2150, 2170 is where I'd be watching for this to come down to. At the worst case scenario, if it does not hold this this demand zone, now I got to color this green, at what appears to be about the bottom of 2285 or so. The bull case scenario, and I think you're going to know pretty much immediately into the open tomorrow. The bull case scenario is it's got to get a pre-market or after hours or market open reversal right off the bat and reclaim close to $30. I think you're looking at 29.30. It's going to be some really key levels for this to continue the momentum and have a crack at 30.69. But that requires a pretty big sized move. Let's just be honest here, right? This is currently at $25.09, which means you're expecting at least a 20% move tomorrow to reclaim $30 so we can continue the momentum that we've had. It's possible. It's possible. If I was to weigh out right now what seems more likely, just based on the move that we had today, based on the fact that the options chain got quote-unquote diluted, you increase supply, which decreases demand. Now, you know, picture's changed a little bit. I would probably say it's like 60-40. I'd say 60% you've got downside, 40% you've got upside. That's about where I'm at. I got to be honest. I came into today looking at yesterday's chart, and this was set up in a way that was not inherently bad, you know. And I think I'd be interested to see. I didn't keep a close eye on this. If you did, let me know in the comment section down below so I can take a peek. How did the options chain on GameStop fare? I'd be interested to see whether or not they raised the options chain, the amount of strikes that exist on GameStop as things moved. I don't know. I mean, I didn't pay enough attention to it, so I'm not going to pretend like I know. But I do think, just based on things that make sense in my head, that did happen here with AMC. That options chain did make a difference. So if you're a stockholder, this is still a beautiful week. Things are looking pretty good. You're looking at daily candles way higher than 1290. I mean, we're up well over 100%. Well up over 100% since March 14th. And that's a beautiful 2 weeks. So patience. That's about the best thing that I can say for the way that this is looking right now. That brings me to BBIG. I'm going to spend a little bit of time on this. Today, BBIG had a decent little move down. And it was off of the breakout from yesterday. So what you saw happen is in the pre-market, it tested the top of that, now acting as supply zone, previously acting as or now demand zone, previously acting as a supply zone, which is just basically inverse. It means you'd expect buying pressure instead of selling pressure. Try to bounce off of that twice. Test right here, test right here. What you really want to see is a bounce out of this demand zone to come back up and retest what appears to be a slight downtrend. Now, I don't think it's a mistake or mystery or coincidence that IWM was down 2% today. And then consequently, growth stocks, small mid-cap companies such as BBIG, such as AMC, had shit days. I mean, you just got to look at the way that the IWM moved today in tandem with the worries of Russia and the uncertainty of whether or not there's going to be a peace treaty. Look at the way that moved, right? IWM was down 2.01%. AMC was down 12.77%. down just basically the same as IWM. BBIG, really pretty similar move here. I mean, you can look at this compared to IWM, you can just tell that the small mid sector in general, like everything that had to do with the small mid cap company got smoked. I mean, everything did. It was just not a good day for growth stocks in the grand scheme of things. So I think this is what you're looking for. You really are looking for a break out of this downtrend. You got a couple different tests here. If I was to look at this, you can see touch point, touch point, touch point, touch point. You can even extend this down for a couple different ranges. If I wanted to grab, let's just say the top of this wick as well, you're probably looking at two different spots, right? This downtrend right here, followed by this downtrend right here. If you come into the open tomorrow and you can crack over 325, I think you're going to work your way out of this demand zone, which is ultimately going to bring you up to the levels that I had mentioned before. So keep your eye on that. It's still looking pretty decent, down about 7.7% on the day. The bear case scenario, I'm going to give you this too. We got to be ready for both situations. We got to take what the chart gives us, not what we want to see. The bear case scenario is that it just continues to knife down, in which case I think you are going to see a drop down to 282 same day. Right. What I think this rides on is IWM going to get a rally tomorrow. I think that when the SPY, all that it does is knife. You didn't get any sort of relief bounce. You didn't get any sort of this, sort of support. There was no support. You typically see a pretty decent sized move back in the right direction. And the SPY got it here at the close, but IWM did not. So I would be surprised. I'd be pretty decently surprised if in the next day or two, growth stocks don't get some sort of move back to the upside. So we'll wait and see. I guess we gotta wait and see, baby. I don't know. It is what it is. So with that being said, let's go over the SPY. It's just tying into IWM. IWM, as it had a better day yesterday, had a much worse day today, down 2% or so. And the big news that I've seen rolling around basically everywhere is, there was talks about how Russia and Ukraine may come to some form of a peace treaty, a conclusion, right? If you look up Russia news, what you're going to notice is basically the exact opposite of that. You're going to read that that Russia may in fact be sending more troops to Ukraine, and you're really not seeing any form of relief yet. You can look at this. Pentagon says Russian troops are repositioning. Less than 20% of Russian troops around Kiev are repositioning. Pentagon on day 35. Russia-Ukraine war latest. Putin misled over Russian military performance. It hasn't calmed down enough yet, and I think that has added a little bit of uncertainty to the market, which then obviously moved things down. I'm personally inclined to believe that there's going to be some form of relief. We'll take a look at how that looks. I'm actually going to pull up Unusual Whales right now and take a peek at what flow looked like into the close for the SPY, because that could actually genuinely impact the way that you see things move around here a little bit. I'm going to look at the hot chains and pull this down for you really quick. So looking at the hot chains, essentially what this is saying is the most active call and put options chains coming into the entirety of the day. And you can see that tomorrow you've got a kind of an even split. 460 calls, the 0-day expiration today, those obviously didn't pan out very well. Then you can look at the 0-day, there was 458s, and they were pretty split even for chains on the day. You have 2.4 million total calls, 3.5 million puts. You may see some continuation tomorrow. It's entirely possible, but I don't think that continuation will come without some form of a relief bounce. So if I had to take a guess, I'm going to try my best to redraw what IWM and the SPY looked like as they moved around today. I would expect something like this. Knife down pretty hard, especially the latter half of the day. Coming into the after hours and pre-market, futures, whatever. I think you'll see some form of a rally. If you do get continuation, it's probably going to try and match some form of a downside level of resistance, reject, and move down for the bear case scenario. That's the worst case scenario, right? And I think that this is going to settle eventually. There's this Russia-Ukraine situation, but for the time being, the uncertainty is king. I've talked about this before. I'll say it again. Russia not giving exact details, saying that we've got peace talks, things are going well. And then all of a sudden, out of nowhere, you got the uncertainty of, oh shit, what's happening? You want the certainty. You want to see what's going to actually end up happening, and that's what the market's teetering on right now. Is hey. We want to know, is Russia going to end this, or are they not going to end this? And I think that added some uncertainty because it's obviously contradictory to what he had previously been talking about. So with that being said, let's dive into the last little pieces that we've got here for the day, which is going to be, let me come back up, AMD, right? AMD, Discord, and then tomorrow. And then that's going to wrap up basically everything that we have to discuss. AMD was the play of the day that I had set up for yesterday. Tighten you goofball. And what did this end up doing, right? Let's look at the 1 minute candles and see basically what took place here today. So into the open, you actually ended up getting a knife straight through this previous supply zone, now acting again as a supply zone. And it came within about 50 cents or so from the top of the next overall supply zone. Couldn't quite crack it, right? Couldn't quite do it. And just barely hung on by a thread for a little bit, right? Just kind of trading back and forth, back and forth, back and forth. Gets a downside level of resistance and then comes back down to retest this supply zone. You can see the chop, right? Chop, 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 chop. Now acting as demand, didn't quite get it. Tried to break out of it. And this is the key level right here, right? You can see that it tries to break out of this now acting as demand zone, but it can't. It bounces off the top of the box to end up knifing through it. And when it knifes through it, it does exactly that. It attempted to bounce up, couldn't do it, knifes right down. You could have actually taken I probably wouldn't have taken this. This trade right here, you know, a little bit interesting. I would have expected to take an entry off of this potentially green line. I'd have to go back and watch my video. You know, I take things as they sort of are. You could have taken it as an entry out of the box. That's personally what I probably would have done. And scalped it for a couple minutes right here. See it exit the box. You come back down, you retest it. You can take an entry for a call literally right there. Ride that for 5, 10, 15 minutes, whatever. See that it's kind of just jostling around. You don't really like the chop. Nobody likes chop. That's not where you're making money. And that would have been okay. But obviously the big mover here was the knife through this box. And this would have been a perfect entry point. You can see it comes back down to that momentum level, which we had marked out yesterday, and couldn't quite hold it. This is the momentum level. It tried to chop around that for really no time at all. I mean, it broke down, chopped around, broke down, came up, tested again, broke down, and it was just sell off for the rest of the day. So obviously, the best play today was the put side. You would have had to be really patient in order to do that, but the levels are the levels, right? We mark these out. Demand zones, supply zones. Momentum levels, the momentum level being the previous intraday high. You come back to the hourly, you look at how this looks. This is just a 2-day prior intraday high. Pretty simple stuff. I mean, these are points in which you can have a planned entry, a planned exit, take some specific runners, and then a full exit of your position. So, that was a clean setup. I mean, it was pretty obvious for a put anyways. The call would have been a very difficult ride, but that comes down to the generalized trend of the market. As you look at the SPY today, it just had a rough day. And to be quite frank, you know, this is actually breaking down, just testing now a breakdown of this huge, large scale sort of falling wedge, rising wedge setup, which is actually a bearish reversal. I would not be surprised to see a couple days of downside chop, whatever it may be, slower growth at the very least off of that move. So that was AMD, which brings me into the Discord. Now I want to show you guys this because this is actually pretty dang cool. I'm happy with this. This is the play of the day. I'm going to call this the pod. The pod today was actually one of my buddies. His name is Sauce. And he used the fire off alerts. We've got obviously the free alerts, the 3 minute, the 5 minute, the 1 hour, the 3 minute, the 5 minute, the 1 hour on the 921 and the 1348. And he absolutely freaking nailed SoFi and Neo. These are both stocks that are decently liquid. And he was able to catch some pings, use his own technical analysis, made it out pretty well. We gave him some money. He made it out pretty decent, you know, absolutely free. You can scroll through all this and see that people really have been doing very well. Affirm, this guy profited very, very nicely. You can look at this. Oxy, very, very nicely. Perfect call on AMD. I mean, he traded the AMC. That's funny. Oh, no, he did. Yeah, look at that. I mean, this guy took the AMD call. He used technical analysis. He used the fire offs. You just see how things are moving and you know exactly what to do. This guy, holy shit. I mean, this is just absolutely nasty. $221,000 day, 38% gain, total gain. I mean, that's just dirty. So congratulations to all these guys. This is freaking beautiful. I'm very happy about it. And if you want to join, there is a link to the Discord in the description box down below. It works. Every day people are making money. You just can't get greedy. Have a plan, take some runners, have a stop loss, have an exit plan. You're going to be cooking with Crisco. I mean, there's opportunity every single day in the market to make money. I've got an options and charting masterclass that's absolutely free here on YouTube that you can watch. It's an hour 20 minutes long. That'll help you learn how to do all this sort of stuff, and you can make some more money too while you're waiting. So that being said, I'm actually very interested in the SPY going into tomorrow for the play of the day, and then we're gonna wrap up the video. This is kind of long, but there's a lot to discuss. Going into tomorrow, I think the SPY is in an interesting situation. I think there's an opportunity here for what I would say is that retest pattern, right? Now, this is going to be very interesting. Let me show you this. And I'm going to be quite honest with you. If this ends up happening, if you end up getting a down day for the SPY, it's 1,000,000% going to reflect how AMC moves tomorrow. If the SPY is a red day, IWM is a red day, expect AMC to be red. I'm just going to paint that picture perfect. I want you guys to know that SPY red is most likely AMC and GameStop red. I do firmly believe that. So I'm watching for this, right? We talked about before the rising wedge, which is an idea that eventually you're going to have some form of a bearish reversal. It doesn't matter the time frame. The longer obviously means that you expect a longer reversal. But the way this is set up, there's two different ways that you can play it. I would be looking specifically for a put, but a call is also possible. I'm going to go over the call first. Call for me would look something like this, right? I would be looking for a comeback up into the open, a test of supply zone, and a bounce up off the supply zone. This to me would be an entry for a call. I likely would not take a call for any other reason except for that. And I marked off this supply zone previously. And the top of this is at about 460 and three quarters. So $460 and 75 cents. You're going to be watching for that. I'm going to write that down right here in case you want it. 460.75. I would take a call off of a bounce, not the immediate break, but a bounce out of that supply zone, then transitioning to demand, right? More likely to me is this. I would be looking for an entry as a put. Now, let's just say into the open. Let me erase all this. You can come back and rewind if you want to rewatch any of this stuff, but I'm going to keep it clean. For a put, I would be looking for something a little bit different. I would be looking for this. Runs around. Two different scenarios. Scenario one, comes back up to test this upside level of now resistance, previously support, and rejects into the open. I'd be looking to grab that rejection into the open. I think you'd see a decent amount of chop around. Or B, right? B, which is going to be silver here. Silver, I would be looking for a rejection off of supply to grab a position at that rejection spot. You're going to know, right? I've talked about this before. In case you don't know, there is a section in that video that I mentioned before that'll explain this to you. But that rejection off supply, within minutes, you're basically going to know if it's going to knife up or if it's going to knife down. Because if it chops, it's likely going to knife down. And I'd be looking for a put entry off of the rejection of this red box. The 1 through 4, right? You're looking for an entry plan. You're looking for stop loss. You're looking for runners. Runners meaning where will I start to take profits on my position? Let's say that I have 10 puts. I'd be looking to take 2 here, 2 here, 2 here, which will leave you with 4 in the end. And then the last 4 would be your final exit. Have a plan for these 4 things. That's my thing. Ultimately, at the end of the day, you got to do what you got to do. But I think that's an opportunity both ways. So that's kind of what I'm watching into tomorrow. Key levels, obviously, is going to be this hash mark, this level of support. I'll bring up my chart here really quick so that you can watch this. I think it's just going to be 457. I think that there's a decent chance that you see the full range of 460 to 457.40. And if it breaks down from there, you genuinely could see it pop all the way down to 454, in which case, as a put, you're making a pretty fat stack for yourself. So I suppose that's kind of that. It was a long video. I know we had a lot to discuss, but I try to pack a lot of value into whatever we're talking about, have a full chat, have a full conversation. And to wrap it up, AMC, this is the hard talk. These are the hard things to discuss. But I'm just not going to bullshit you, right? I said that if I thought it looked like there's an opportunity for this to go the opposite direction, that I would tell you. This is it. This is the opportunity where you could see this go the opposite direction. I think if you don't see this move in the pre-market and regular market hours immediately, I mean, I'd want to see this basically gap up for me to feel decently comfortable. I think that the options chain is what killed that momentum. And consequently, what that means is those weekly expiration calls they could expire worthless, and it might take a couple of weeks to get some momentum back. You're probably going to do a little bit of this, a little bit of the ebbs and flows. Nothing goes down forever, nothing goes up forever, but we can keep a level mind knowing that we can predict these things by just looking at a chart. But this is starting to look a little bit dumpy. It's got to be straight. Got to be straight with you. This looks Amy's looking a little rough. She might take a kick to the teeth, but the apes are here, man. The apes are here, and we're not going anywhere, baby. So that's what I've got for this video today, guys. Hope that helped you out some. Yeah, that's about that. Catch you on the next one. Appreciate you. Much love, like taps, and peace.